Right. Hi. Great to see so many people register for the annual MAGNiTT webinar. I haven't done these literally since last year, so I'm excited to be able to share some of the insights. I hope you're having a great start to 2026. And today we're going to try doing something different. I'm going to do the presentation, and then following that, I will be joined by Farah, who is our research manager, where we'll be doing a side-by-side Q&A, and then making sure that we leave 20 minutes at the end for any questions that you have, to be able to make sure that we can address them. So if you have any questions throughout the exercise, please put them in the Q&A box or in the webinar chat, and we'll be more than happy to address them. We've titled this presentation, MENA, a magnet for venture capital in 2025. And for those of you that may not be familiar with MAGNiTT, we're the leading private equity, venture capital, and venture debt data intelligence platform for emerging venture markets. We cover Africa, the Middle East, Pakistan, Turkey, and Southeast Asia. And the report is going to be based on some of the insights from that. We've mixed up our presentation this year, so we're doing something a little bit different. To start off with, what are the 5 things that really struck us in terms of macro? Because I think it's always important to start high level. I mean, if there's one thing that we want to say about 2025 is that the year where uncertainty and unpredictability has now become the norm. Here are just a couple of the high-level headlines that we saw last year. Common theme, probably Trump and the US is in the majority of all of them, but it was a year that really did drive unpredictable and uncertain times. And that is an environment that is not particularly healthy or positive for private capital, albeit we have seen a very strong performance in 2025. If we remember, it was the year that the Fed started to cut interest rates more aggressively. In the second half of the year, we saw 3 rate cuts. The US policy has been to begin quantitative easing. President Trump has been clear that he wants Jerome Powell out so that they can cut interest rate further to drive the economy. And this is something that's extremely important for private capital because the lower the interest rates, the lower the cost of capital, less likely to have crowding out effect. And we've already seen, starting in the US, but also here in the region, appetite growing for late stage capital. It was a very volatile year for public markets. Now, we tend to lag the public markets, but in a year where we saw Liberation Day and a drop of close to 30% in April, given the onset of the tariff regime that was set in the US, we did see record highs across all the US indices and if not European indices, and double-digit growth in many of them. That is a very positive environment for tech companies that are looking for valuation growth, looking for new environments for IPO listings. And so the question is, will that be maintained heading into 2026? Not just that, a big question on everyone's lips is AI here to stay or is it a bubble? And even the Mag 7, with very levels of growth rates, saw record highs on almost each of the top 7 stocks that make up the contribution for the S&P. Nvidia alone saw a 35% increase in its share price compared to the start of the year. There was a flight to safety. We saw gold as an asset class grow 64%. And even within the first 20 days of this year, we've seen an incredible growth in gold, silver, and some of the commodities, given the geopolitics that's been happening in the first couple of days of this year. But last year, a 64% growth was almost the best performance of safety assets compared to many other many different assets. And even Bitcoin, which actually ended the year down 5%, saw a record high in the summer. It now falls within the ranks of the top 10 assets by capitalization. And it's interesting to see how the top tech companies, as well as those that are flight to safety, gold, silver, but now Bitcoin, form part of the top 10 by market cap. Finally, though, it's not without noting that oil prices have now dropped close to 54% off the peaks of what we saw in 2022, 20% almost last year. And the motto of drill, baby, drill in the US, a mandate of Donald Trump, is to bring down oil prices so that the affordability, something that he has now coined as a key metric or term for US politics, is cheaper to curtail inflation. Now, the flip side of that is for GCC geographies, especially the sovereign entities that have been fueling venture capital through their fund of fund structures, how does that impact budgets and the economy at large? So some of the key macro themes that we've been looking at over the last couple of years, a couple of months with regards to the ecosystem. Now, what happened in venture? So this year we're trying something different. Here are the 10 MAGNiTT takeaways that grabbed my attention from the report. Number one, starting with the US or global venture, if you look at CB Insights, last year saw a 47% increase in the capital that was deployed in venture capital. But more interestingly, this was off the back of a decline of close to 20% of the total number of transactions. What does that tell you? Investors are making bigger bets in a smaller number of investments. How does that compare to emerging venture markets? Well, this is what we cover: Africa, the Middle East, and Southeast Asia. And what we saw here was an almost flat amount of capital that was being deployed against similarly a 12% drop in the total number of transactions. But most interestingly, which will be the recurring thematic through this presentation, MENA outperformed the rest of the emerging markets, where Africa and Southeast Asia saw declining amounts of capital being deployed and declining total number of transactions. The MENA region outperformed with increased capital and increased number of transactions. Here you'll even see that the Middle East, not even MENA region, has seen more number of transactions than Southeast Asia for the first time since we've recorded. It saw a 13% increase in the total number of transactions and now sees it outstrip Southeast Asia, not by capital, but by the total number of transactions. A couple of interesting anecdotes. Exits have remained a major theme in the Southeast Asian ecosystem, and therefore the LPs that have historically invested in Southeast Asia have pulled back that capital availability. And we've seen many of the Southeast Asian investors come to the region, specifically the GCC, to fundraise. And we've even seen the likes of Temasek making their first LP investment in GCC funds as a point of differentiation for their investment thesis. So clearly the Middle East has become a bigger magnet for capital, not only for GP deployment, but also for LPs looking to deploy in other areas. The MENA region was the standout region. It saw 74% growth in terms of capital deployment and a 6% increase in the total number of transactions. This is really solidifying the Middle East, if not the GCC, and I'll come on to that in a second, as a real hub to now start competing with other geographical hubs. I always make the point, if you take a map right now, a global cart of the map, and you take a dart and throw it right at the middle, you'll end up in the GCC. And we're seeing it at a geopolitical level. I already mentioned, for instance, the Trump administration's first visit to the region being their first international visit globally, where they visited UAE, Saudi, and Qatar, that these geographies are now beginning to compete specifically in the AI space at a global level for hardware, software, infrastructure. And this is also beginning to reflect in the numbers. Now, let's be clear, 3.8 billion is still very small compared to some of the geographies that we see in Europe or the US, but compared to years gone by, even the year of 2022, the total amount of capital has now outstripped the amount of capital that was deployed in 2022. This has been partly driven by the return of investor appetite to late stage. Late stage being, for instance, the mega deals, investment deals that are greater than $100 million. We saw 5 late stage deals accounting for close to $1 billion of investment, which is more or less in line with what we saw in 2023, slightly lower. So the investor appetite, and I talked about interest rates coming down, has shown that it's shifted from years gone by where the focus was predominantly at early stage and that this late stage capital has now returned. But I think the true story lies in these two charts. Close to 86% of all capital in the MENA region has come from Saudi Arabia and the UAE. And 71% of all all transactions have come from those two geographies. So where we used to see Egypt and even the Levant play a bigger role, we're now seeing a continued concentration of capital and investment activity in two. Now, important to note, for instance, Qatar now ranks fourth by total number of transactions and capital deployment, and soon potentially catching up with Egypt as an ecosystem, but is another example of a GCC geography. And I wouldn't be surprised, and I know, that we'll be likely to be publishing more GCC-focused content for our clients and people interested to understand what's happening here in the region. But within that, Saudi now ranks first, both in total number of transactions and capital deployment, outstripping the UAE in both for the investment activity here in the region. Another interesting anecdote that we've picked up: international participation has now outstripped local investors. That was the case, according to our data for 2024, has continued in 2025, so that as part of the maturation of the ecosystem here, that we're less reliant, albeit on the margins, of international investors, regional investors compared to international investors. In terms of the total amount of capital that's being deployed, 49%, effectively 50% of that capital, has come from investors from outside of the regions. I literally was doing a client call before this one, and they asked the question, why? And I gave three reasons. One, the fund-of-fund programs that continue to attract international investors have shown the fruits of making sure that they invest part of that capital deployment into the region. The second, as interest rates have continued to come down, investors' appetite for the region has continued to grow. And three, companies in the region are beginning to have global focus as opposed to purely regional, and attracting international players. Let's remember some of the names that have invested last year: KKR, Blackstone, BlackRock, General Atlantic. These are staple international investors that are now beginning to make investments. But part of that has also been driven by the geopolitics. If you looked at the US forum that took place on President Trump's visit, the likes of Jason Hua, David Sachs, many of the leading investors have come as part of that international delegation, and many of the entities like His Excellency Swaha and the ministries here in the UAE and Qatar continue to do outward attraction programs to bring people to the region, let alone the number of conferences that now take place, whether they're Super Returns, which is taking place next week, LEAP, GITEX, FII, continuing to attract awareness and attention to what's happening in the ecosystem. And interestingly, 23% of all of the investors that invested in MENA-based companies came from the US alone, the largest proportion of the investor base. Now, in our MENA report, we also show the breakdown of capital, and you can break this down for every geography that we have on the MAGNiTT platform if you're a client. But just looking at the MENA numbers, 23% come from the US alone. In terms of sectors, fintech, in many of the geographies and on aggregate, has remained the industry of choice. In fact, if you look at that number, it accounts for the same amount of capital as the next four sectors combined, with an 80% growth year on year. We also saw some of the big mega deals being specifically within the fintech space. Again, a question that I was just asked: do we expect to see more investment capital in deep tech or other sectors? No, my view is until we start seeing the flywheel of exit activity kicking in, I think that the investor base will continue to focus on that flight to exit. And fintech globally sees one of the biggest amount of capital being deployed. And therefore, it's a safe bet that as companies look to IPO and exit, they will focus on this space. One area or technology stack that will be interesting is AI. MAGNiTT now covers AI investment on the platform. You can filter for all AI invested companies across the Middle East, Southeast Asia, and Africa. And here's a point of comparison. If we look at CB Insights data, 50% of all capital that was deployed at a global level was in AI tech companies, whereas here in the region, 21% of total venture capital went into AI companies. So there is still catch up, but when we look back to 2021 or even 2023, it was single-digit proportions of investment in AI companies. Now we're in double digits, in 20s, and as I've always said, We've seen this in sectors. We've seen this in the evolution of the total amount of capital. We have a crystal ball. We can see what happens in the region by looking at what happens in the US or the global landscape and delaying that 12 to 18 months. We are currently, if we were to compare it to the left-hand chart, in 2023. And I wouldn't be surprised if in the next 2 to 3 years, as more investment goes into companies in the AI space, that we get to close to a 50% contribution of all capital from AI companies. To round this up, the number one question that's on everyone's lips, liquidity. Where is the flywheel going to come from? We track M&A transactions and IPOs. We saw a 41% pickup in M&A transactions. We saw 2 IPOs in the region. But let's be clear, with all the volatility that I highlighted in the macro space, it is not likely that we will see a flurry of IPOs in the next couple of months. The IPO windows are challenging. A lot of eyes are in the US to see if we start seeing IPOs happening there. IPOs in the region, the Tadawul had one of the worst performing stock markets that we've seen specifically here in the region, which doesn't make it fruitful for listings of companies. But in terms of M&As, we have seen globally a pickup of M&A transactions. But again, if you look at the right-hand chart, not in line with the levels that we saw in 2021 and 2022. So there is a catch-up of that M&A transactions, but our view, or mine specifically, is that 2026 will be a record year of M&A transactions. We are likely to see more than 2 IPOs happening here in the region, and this will be something that is extremely important to pay off the founders, the existing investors, employees, and the governments who have invested in this space, and it'll be important for that flywheel to continue, barring any macroeconomic crisis that unfolds in the next 12 months. How can we help you? So if you're interested in any of the reports that we've published several already and will be publishing a MENA report, Saudi report, GCC report, AI report, investor ranking report in the next couple of weeks. So please reach out to the team and we'll be sharing links of some of the reports that you can understand what's included in them to get access to them. All the underlying data is available on the platform, and every single one of these charts is available to be manipulated through our advanced charting tool on the platform, where you can export the charts, export the data, and see what all of the transactions. We're very dear to transparency and information, and all of this information can be exported with the underlying data. I will leave this up on the camera for you to be able to download, scan the QR code, and a member of our team will be sharing some of the reports. Now we're going to be trying something different. Farah, our research manager, is going to be joining me here. I will now close this and ask someone from the team to share the links. The idea is to do something a little bit different. We're going to have an interactive conversation here. I have no idea what the questions are that she has prepared to share with me, so I welcome Farah. But if you have questions that you would like us to answer, I want to make sure that we leave enough time. We'll do a 20-minute Q&A, and then any questions that you have, please put them in the Q&A or in the chat box, and we'll make sure that we get to them with 20 minutes less of the presentation. So, Farah, the other celebrity that as always, if you haven't seen her already, she's on Al Arabiya, on CNBC, all of the different outlets in Arabic, because unfortunately, one thing is I can't speak Arabic, so she's been doing a great job with that. But yes.
Thank you. Happy to be doing this today. Hello, everyone. Okay, there are a couple of questions. As Philip mentioned, he doesn't know anything about those. They're an overarching aspect of the ecosystem. So we've discussed macros most of the times. Global uncertainty, geopolitical tensions, especially in our side of the region. And we see LPs facing the potentials of the risk calculus of this. How have these macro factors reshaped global investor behavior towards emerging venture markets specifically?
I believe we need to spotlight the screen. So let me just put this. We're good. Okay, cool. Sorry. How's the global macro shaping the ecosystem? Look, I've been very dear to the fact that the macroeconomic environment is extremely key for private investors. Uncertainty, as I mentioned, is a challenge. Private investors kind of like certainty, but number one, they look towards the public markets as an indicator for valuations. They look to the public markets to understand what's happening in terms of valuations. And ultimately, exits has been a massive challenge here in the region and remains something that needs to be seen and accelerated on. So when we see these geopolitical movements, and forget the US, you're seeing stronger ties with Southeast Asia, stronger ties with Africa, European jurisdictions. All of these provide a fertile environment for M&As as you begin to build technologies that are not MENA focused. I always give the example that there was a time where the MENA region was what people wanted to become. The Kareem for the MENA region, the Uber for the MENA region, the Amazon for the MENA region. And at a time of 2017 and 18, that was basically the mandate. How can you be in as many countries as possible? As liquidity dried up, people needed to focus on unit economics. People needed to focus on profitability. And as such, they began to focus on core markets. But scale remains the name of the game. And ultimately, to get to scale, you need to think of other jurisdictions. So companies, specifically in the AI space or products that don't need to be heavily localized, can look at Southeast Asia, can look at Africa, can look at Europe, or even the US, where there's opportunity for bigger markets to scale into. And more importantly, they also become attractive for other companies that are looking to scale into this market. In terms of investor appetite, look, they're always looking at the US in terms of what are the latest trends, what are the latest companies that are being developed, can they be applied here? But I think that the macroeconomic indicators are really drivers for pricing and investor appetite and the availability of liquidity.
Amazing. Thank you. We've seen across the reports, across the presentation, the numbers for MENA are record highs, particularly in Saudi and the UAE. Question remains around the depth and sustainability of this. During 2023, Saudi was mostly on late stage. 2024 was a bit of early stage Series A. Are we still in a transition phase? Are we still in the early phase, or where are the relatively countries with the bigger shares in the region at this point of the progress?
I think in both cases, it's interesting to kind of somewhat differentiate. Saudi Arabia's mandate top down is very clear. They want to diversify the economy. They want to continue to drive youth unemployment and the opportunities for companies. There are mandates and government initiatives at every level. NTDP continuing to foster the early stage investment space. SVC, Jeddah, Sanabo, the fund of funds, trying to fill the gap of seed investment Series A, Series B. The Tadawul, the CMA are all looking at the exit opportunities. The ministries are not only looking to do events to attract people to the kingdom. I joined for the first time, and this has been something that I continue to advocate, international trade shows to London, to Singapore. They're going to, I believe next week, they're going to be going to the US. Currently, they're in Davos, taking and handpicking investors and startups to international jurisdictions. All of this points to maturity. And I think one of the things that when you dig down in our paid report for Saudi is that there's been growth at every stage of investment. It is not as it was in 2023, that 65% of all capital came from 5 companies and that the underlying ecosystem accounted for the minority of investment. This time, a record amount of capital, a record number of transactions, and yet the underlying ecosystem saw growth at every stage. And that's very much a credit to the efforts that are being put in place to kind of drive and develop the wider ecosystem. Similarly in the UAE, but here it's very much at emirate level. Each emirate has a different prerogative. Here you're seeing something different. People are looking to set up to scale into the other jurisdictions. Clearly, the scale and the size of the UAE market remains a bit of a challenge, but it is a fertile place for talent acquisition. It is a fertile place for B2B companies to set up. Now we're seeing hubs being created in both Abu Dhabi and Dubai. Qatar is another example of a place where international companies that are coming to the region for the first time are choosing to set up and then scale into other jurisdictions. But I think that it's generally a sign of the maturity of the market that we're seeing more companies coming to the region, more companies getting investment from the region at each of the stages of investment.
True, I second that. I was asked today about if we're removing the impact of the mega rounds, what happens. Even while removing the impact of mega rounds in Saudi, we're at 101% improvement compared to last year across the funnel, all stages from early stage, which saw a 50% up until Series B. we're at double to triple digits improvements in both deals and funding.
And to point out a report that we published last year, and we'll be doing an updated one this year, a funnel. We continue, especially for our government clients, to focus on a funnel analysis. How many companies that raise seed funding over a period of time then move towards Series A, Series B, Series C? And we always benchmark against Southeast Asia and Africa. Why? Southeast Asia is 7 to 8 years more mature than the Middle East, but there are a lot of learning lessons and many similarities and differences that we can see in terms of kind of the makeup of the Southeast Asian ecosystem to the Middle East in terms of the breakup of the demographics and the geographies. And what you see there is, off the top of my head, an 8% conversion from seed to Series A in the MENA region, a 12.5% conversion in Southeast Asia, and close to 20% conversion if you look at data from the US. These are important funnel analysis that we provide to our clients because we need to understand how are each of these steps being developed and what do we need to do to improve the access to capital for those companies to see more success rates at the lower ends of the funnel.
All right. Okay, speaking of the positioning and everything, so there are definitely strong fiscal positions across the countries of the region, more policy clarity as we're seeing overall longer term visions with the 2030 and the 2071. Do you think GCC is increasingly being viewed as a relative safe haven or compared to other regions, a temporary risk reallocation?
Look, I think people who are here in the region completely understand the region and the risk of the geopolitics has remained a challenge. But when they're invested in the region, the growth and the opportunity of the Middle East is one of the most exponentially fast growing ecosystems globally. And I think that that's been highlighted even at a geopolitical level where Saudi Arabia, the UAE, the GCC continues to be playing a role on global geopolitics. So from that perspective, if you're in the region, I think it's here to stay and it's only growing. You just need to hear metrics from the total number of people migrating to the region, the total number of people relocating companies to the region. These are all extremely positive things that are not related to venture, but to the wider ecosystem, the wider economy. In terms of venture as an asset class, look, it's continuing to develop. I wouldn't consider it a safe haven as such. I think that people who are growing their interest and appetite for the region understand the nuances of the region, and it's more opportunistic. I still think we need to work out how the exit situation will evolve to have it as a more of a sustainable long-term play. But a lot of effort is being put, and I keep reminding people patience is a virtue, number one, and number two, the exits don't just happen. People need to be interested in buying. Companies are bought, they're not sold. IPOs are challenging structures for which we have very few case study examples of them, and that we've just gone through a period of 3 years of extreme volatility prior to what was a record year last year. So we're still coming off the back of that. If that momentum continues for 2 to 3 years, barring any black swan event or macroeconomic challenge in the public markets, then we will begin to see the region considered more of a safe haven as such, an investment opportunity.
Amazing. Speaking of international investors, because those are the side of investors who are less likely to know about how things move into the region. Nearly 50%, as per our latest report, are coming from non-MENA based investors. Do you think this is a signal of credibility to the ecosystems? What's basically the reasoning with everything going on of them what's convincing them actually to get their global capital into a region like ours?
Look, to start off with, it's called a spade a spade. People were brought here because of a lack of LP funding globally, and people considered the Middle East was flush with cash, and therefore many of them were coming to fundraise. That has been a phenomena for 4 to 5 years. The key is that those have translated into investments in the region. Now, it's clear that if you're raising a $100 million fund, LPs here have said, what are you going to deploy in the region? That is now beginning to percolate into the numbers where we're seeing more transactions, more investors, and more capital coming from those players. But what that also then implies is that people start hiring people in the region, looking for more opportunities in the region. And actually, when you look at the names BlackRock, KKR, Blackstone, General Atlantic, A16Z, Y Combinator, all of these types of institutions making investments with frequency now, maybe not at the level that we see from the local investment community, but beginning to opportunistically invest more and more. This is a sign of positive growth. The second thing is For anyone that was able to attend the FII conference that took place back in October, the boardroom discussion on the first day is something that was extremely impressive to see. When you have the CEOs of Goldman Sachs, JP Morgan, Blackstone, BlackRock, all of the likes of them, Carlyle, talking about how the Middle East has become a focal point for investment activity and talking very comfortably, publicly, critically about their own companies, not anything for the region, it creates a level of transparency that's extremely important and for us to embrace in terms of the maturity of the ecosystem and the confidence that they have in the region. And that's an extremely positive environment. So yes, there is a growing appreciation, understanding, and comfort with the region, but I don't think that we're completely there yet. There's still work. Success stories breed success. Exits, the flywheel of exits will continue to breed more success. But I think compared to many years gone by, we're in a much stronger position than we have been historically.
Amazing. You mentioned something now about M&As, startups are bought, not sold. 2023, 2024, we had expectations that those years are going to be the years of exits. We've seen slight improvements here and there, but Q1 2025 had a record number of M&As in the region. Expectations do remain high despite the other 3 quarters accounting for a similar number compared to Q1. What's the biggest misconception founders and investors today are having about exits?
Well, one, that we don't track secondaries. There are exits that are happening, but they're very difficult to track. Secondary investments, whether they're part of investment rounds, means that there is some liquidity where an investor doing a Series B will take out the early stage investors in the cap table. And so there is some liquidity that's being provided, but extremely difficult to track. And this is one of the 3 stated challenges that I have for the team. I know I digress, but secondaries, DFI, we look to chart performance behavior of VCs in the region to be able to benchmark them against the global standard. And then the third is to try and see how we can capture LP data more comprehensively, because I think there's a growing appetite to understand who are the LPs, where are they investing, what sectors are they investing, and fourth, private credit, which is top of my agenda. But the second thing is that yes, companies are bought, they're not sold. And that one of the challenges that we saw in the last 2 to 3 years, and I've mentioned this on previous podcasts, is that there are many players in an acquisition. There is the acquirer, there is the seller, and then there's previous investors. Where valuations have come down dramatically compared to the peaks of what we saw in 2021 and 22, those are people that can veto sitting on boards, the investments or the acquisitions. And therefore, where I had predicted because I thought things were cheaper, in fact, the reverse happened. They're cheaper so that the people vetoed those transactions taking place. Now, what you're seeing is that many companies are growing back into the valuations that we saw in 2021 and 22, and therefore the environment is much more fertile. And given the attractiveness of the region, of companies being acquired from global players, from regional players, corporates, the one thing that I continue to put as an orange flag is the impact of oil prices. With oil prices coming down 54% off their peaks, is there continued budgetary concerns, whether at an economic level, a sovereign wealth level, a fund of fund level, to continue to see this investment capital coming in to make these things attractive?
Amazing. We've spoken about fintech, we've spoken about AI. During 2021, 2022, e-commerce was the thing, but during COVID and post-COVID and everything. Fintech is now a concentration. It's taking around 30% of the total funding and the total deals in the region. Do we see this as a risk?
I don't think it's a risk as such. It's frustrating for all of those that are looking to raise funds in other sectors. But I kind of repeat what I said earlier. There's a reason there's a concentration. In any geography, it starts with e-commerce, then it goes into transport and logistics. We're now in the fintech phase. But in the absence of exits, risk appetite is a lot lower than it would be if these investors have 2, 3, 4 funds with multiple returns on their investment. They then start investing in other areas. A sector like AI, like deep tech, requires huge amounts of capital investment and research and development. Those are patient capital investments. Those are usually driven by government initiatives and government investments. And here in the region, if we were to look at the percentage of GDP, they're one of the lowest that we've seen globally. in terms of venture capital investment. In fact, we put a report last year, and you'll see that Singapore has one of the highest percentages globally, even double what you see of the US. But the MENA region is around 0.1, 0.2% of GDP is coming from venture. So when we're looking at more kind of not exciting, but other areas of investment, when we look at deep tech, when we look at technology stacks that are slightly long tail, they require heavy investment. But more importantly, where is the exit coming from? And that's one of the challenges that we have.
Amazing. I have a question about you mentioned what data we're planning to cover over the course of the upcoming years. So market maturity, if we may say, most of the times coincides with better transparency and benchmarking of the data. How critical do you see that high quality data is? How important and critical is it in our region, especially as we grow across the GCC region specifically?
Look, I can't advocate enough for the importance and transparency of accurate, credible data for decision makers. And that's kind of one of the core values of MAGNiTT, and it's on our About Us page. There's a lot of information that you can find, whether it's through AI, through Google, etc. I guarantee you, because we know what the accurate data is, much of it is wrong, much of it is not qualified, and there isn't a clear methodology as to how that's broken down. We are very transparent. All of our investment rounds are verified. All of our investment rounds are available for export on the platform, and a like-for-like benchmarking for each of the geographies that we compare ourselves against. And for governments, for corporates, for investors, for the wider ecosystem that are making decisions, it is extremely important to have accurate data, which is why MAGNiTT is a data business first, and then an analysis and a platform second. We're in the business of aggregating the most comprehensive data set, making sure that it's credible and verified, and lest we not forget for the audience, in a very opaque and challenging place to get data. We do not have the regulatory bodies to be able to get this information. So for us, it's extremely important, which forms the basis of many of the reports that we publish.
All right. If we're to sit in 2 years from now,
Yes.
what would convince you that the GCC has fully transitioned to a global venture ecosystem?
Great question. I think that the exit thing is important because I think we need to continue to see companies, as you said, a safe haven, that they're attracted. I think that we continue to attract talent, which is extremely important, but are they going to tech or are they going to corporates and government because they're able to pay? I think you're beginning to see some very interesting changes in legislation. I don't know if people saw the UAE change the shareholder structures. The UAE Ministry of Economy has changed the shareholder structures that you can now bring BVI, Cayman Island, Delaware companies here and have allowed for the accountability of multiple share classes, multiple investors, initiatives by government to make it a friendlier place to be able to operate will be extremely important. In fact, one of the biggest initiatives, I think, for the UAE is to become a financial hub to compete with New York, London. It does so, but many of the hubs are still warehoused offshore. Onshoring that will give a lot of confidence to investors. You start seeing global companies being created from the region. So imagine an American, a European, a UK, or a Chinese person using a product from the region. We've always talked about the importance of localization. That is an aspiration that we should move towards. A metric that I always think is extremely important, but it's very difficult to track and not really looked at, is percentage of GDP from the revenue generated from tech companies. We talk about IPOs, we talk about unicorns, we talk about venture, but the real one is how much of the contribution of GDP is from tech companies. And if we can see a sizable, not SMEs, but tech companies contributing to the GDP of geographies, then we've shifted away from being a nice to have towards a must have in the ecosystem. And so those are some of the things that we'd be looking at in terms of people, access to market. Today, something I wanted to bring up actually, and I'll be doing a post later. Yesterday, there was an announcement by the EU of an EU Inc. license that allows companies to register in a single jurisdiction for the whole of the European Union without needing to set up in each of the individual geographies. It's a 48-hour process. And with that license, you can operate across the whole of the European Union. When we talk about size of market being one of the biggest challenges, Can we replicate that model for the GCC, let alone the MENA region, to have companies have a bigger market access? So I think just to kind of recap, size of market and what can the government do to increase ease of business, attracting talent, but not just for corporate and government, but within the tech space, exits, because that will create success in the market for more companies to come. Um, yeah, those would be three, and the contribution to GDP as a success metric.
All right. Thank you so much. Before I close this out and leave it for the Q&A, one bold prediction for 2026.
AI investments will double in terms of capital deployed. I don't think that we'll get to 50% of the contribution. We already saw a 3x increase compared to the year before, but I wouldn't be surprised that we'll be getting to double that amount this year in terms of the companies that will be raising funds.
Amazing. Thank you so much.
Thank
What a
you.
pleasure.
Thank you. I hope you found that interesting. Love to get your feedback. I know, and I've seen that there are a bunch of questions that have come through in the chat and in the Q&A. So I will quickly pull some of them up to be able to answer. If you have any other questions, please do put them through. And thank you, Farah, and the whole of the team that put all of the hard work into the reports that were published. Again, if you're interested in reaching out to the team, there's a sales form on the platform, and maybe a member of the team can share their email address for you to reach out to. So when we look at US IPO activity from KSA, are we really using it as a proxy for global risk appetite, or does it actively shape local IPO timing and valuations through expectation settings and comps? Look, I mean, I think you always look at the IPO in terms of the investor appetite for IPOs in their geography, but it also acts as a leader towards the appetite for companies to potentially list. So in the US, for the last 2, 3 years, not only did we not see as many IPOs as years gone by, but the IPOs that took place last year actually didn't necessarily perform well. In fact, just before coming on this call, I have a tracker, and one of the things that I would like the team to do is bring out a report on the success of MENA IPOs. If you take 12 of the IPOs that have already happened here in the region, including the likes of Ankhami, Elm, nice ones, only 4 out of the 12 have seen positive returns within a 12-month period. The others have all seen negative stock market returns in a 12-month period. So not only is it challenging for companies to list, but the markets have also been difficult for tech companies specifically. So to answer the question, yes, you do look at the US, you do look at valuations, you do look at the investor appetite, you look at their performance post-listing, but each geography is nuanced. The Tadawul, for instance, as I mentioned, was one of the weaker performing stock markets in the region. One of the challenges is it's so heavily linked to oil that it impacts the pricing. The GFM and the ADX had record years. So in contrast, others have been performing well. But we are seeing changes in regulation. In Saudi Arabia alone, the CMA opened up foreign ownership of companies in their markets, which can make it more attractive. How will that impact local listings? So there are many dynamics that are taking place, but yes, for sure, you do look at global markets for valuations and the performance of those companies. Thanks, Yazid, for the question. How are you thinking of the development of secondary market mechanisms that allow early investors and employees to access controlled liquidity without forcing premature IPOs and exits? Look, we've seen some funds beginning to get created for secondaries. Key Capital, as a point of example, Basr Muftah. We've seen a growing level of conversation around this. Secondaries have already started to take place as part of investment rounds, and I expect that to continue to happen. You've got to remember that there have been funds like the MEVPs, the Bico Capitals, of the likes that have been around for 10, 11 years. Another thing that you'll start seeing on the MAGNiTT platform is a full listing of all the funds with each of the investor profiles that will link investment rounds to each fund and to see which of those are potentially exited, because we want to see what is the impact and the DFI calculations for each of them. And so there is secondaries happening. I think interestingly, last year, you even saw debt as a mechanism to buy out existing investors. Property Finder, a great case study, where Francisco Partners had lent capital to the founder of a profitable company to buy out the original investors in a secondary transaction. And maybe that becomes a mechanism by which we see more secondaries taking place, not only for investors, but for employees. So yes, I do think that this is an opportunity for the region as it continues to mature. Based on current government initiatives in KSA and UAE, which sectors are expected to grow, creating opportunities and tailwinds for early stage startups? Look, I mean, there are a lot of initiatives in both geographies. In Saudi, NTDP specifically has programs for AI. There's a lot of focus in the MISC programs, Munsh'at, across different segments. I was just on a call looking to see how can they stimulate and develop deep tech across the wider market. But historically, we've not seen huge amounts of investments in education, healthcare. We talk about food security. We look at cybersecurity. Fintech is likely to continue. You have strong regulators in SAMA, the CMA, both of whom are focused on developing the financial services space. DIFC, ADGM, the local regulator in the UAE, Bahrain with the fintech initiatives that they drive, even in Qatar through the QFC. So I think that fintech will remain extremely attractive for many of the different startups that are looking to set up. And again, you'll start seeing specialization. I was interviewed last week and we were talking about how historically it's always been remittance and payments platforms. You're now starting to see more neobanks. You're starting to see wealth management platforms, regtech platforms. So I think as we saw in e-commerce, where Aiwa is a specialized platform, you have specific e-commerce platforms in verticals, but then you have Amazon and Souk covering the wider market. You'll see specialization in fintech, which becomes an opportunity for early stage companies. Do you see more unicorns emerging within the MENA region? I mean, just by pure virtue of the fact that more companies will be raising bigger rounds of investment. Yes, I'm not a big fan of the term unicorns. I think there are better benchmark tools, as I mentioned, percentage of GDP. Companies that are valued and are profitable don't need to be unicorns to be successful. But in terms of your question, yes, I anticipate that more companies will be raising bigger rounds of investment and hence becoming unicorns on paper by valuation. Are you seeing an emergence of new funds launching in the region for venture capital? New funds, yes, they come from family offices. I've been surprised by the interest of family offices to invest predominantly in this space as a platform. And if you are a family office looking to get more information, we're beginning to see more family offices looking to learn and understand what's happening in the venture space. There are more, shall we call it, international players setting up funds for the region. There are some selective new funds for emerging markets that are interesting. But the numbers highlight that they're actually flat year on year in terms of the total number of investors participating in MENA-based investments. Will there be a recording available? Yes, we will be publishing this on YouTube and in our blog. Do you have any data on the type of legal structures used in these transactions? Are they largely using safes, convertible notes? We do not. There are other platforms that would be able to provide part of this. We do have when they are safe transactions, but we do not go down to the granular level of each of the contributions for convertible notes in detail. This is not something that we specifically focus on. Please feel free to share any other questions. I know that there's a chat. I will give it another minute to see if there are any other questions. If not, it was an absolute pleasure hosting you. If you are in Saudi next week, I will be at Super Returns Monday, Tuesday. If you are in Doha, I will be at the Web Summit the week after, Monday, Tuesday, where I'll be presenting at both of those. If you're going to be in Abu Dhabi for the INSEAD Entrepreneurship Forum, I'd love to connect there. The next couple of weeks are and STEP that will be taking place the week after that. So if you're going to be at any of those events, please do reach out. If you'd like to get access to the platform, please reach out to the team. We'll be more than happy to support you. and look forward to catching up and a great 2026 to you. And many thanks to Farah for joining me today. All the best.